Hello. Our next presenter is John Banning. He's the Chief Executive Officer of Lion Copper and Gold, which trades on the OTCQB venture market under the symbol LCGMF and on the CSE under the symbol LEO. Welcome back, John.
Thanks, everyone. Hear me? Yep, good. My name's John Banning, CEO, Lion Copper and Gold. I've got sort of a three-pronged value proposition for the audience and our listeners. Maybe a little bit different than where we've been at so far. So we're rapidly shifting to a project development as opposed to straight pure exploration. We've got sort of three value positions with the project developing our flagship, the Arrington Copper Project. The Arrington Copper Project, that's our flagship. It's in Nevada. We've all heard about Nevada today. Nevada's Another important aspect is our exploration upside. We have that in conjunction and outside of the project development flagship, and our strategic land position is a couple of very large. So probably a pretty big difference for us for Lion Copper and Gold and the Arrington Copper Project is the cathode. 99.99% copper pure produced at the mine, not concentrated. Go to China, it says overseas, straight in the USA. Copper really emphasizes that. Spoke with a lot of groups, and it's not landing. This is the copper in the USA. Playing right into the current geopolitical global climate, self-sufficiency, all that romantic. This is playing right. Not to mention the 500,000 metric ton deficit. Pretty advanced project. PFS about 5 weeks away. Last week I just signed off on the final engineering issued for study drawings. Small, very efficient, tight knit group. I'm going to zoom through these pretty quick. It's low operational risk. Anaconda had this in the 60s and 70s. It's got 120 miles of room. It's been drilled to hell. The resources like got a strong partner at the moment with Rio Tinto, Newton in particular. They funded a huge part of the development of this flagship project. Of course, and DFS, and we're looking at going into stage 3, which is Nevada, again, clear and reliable permitting path. It's a huge thing for us last year. Sorry, not last year, in March. Anyone that knows anything about mining in Nevada, water. Okay, you've got to have water resources. Back in 2022, the state engineer forfeited 6,000 acre-feet of water. Our company had 3.5 years of litigation, settled it back. So that was in March. So that was a huge windfall for our project. So we have all the water that we need to go run, build, and run this project. But that's what studies are for. PEA, is it going to float? Is it going to make it? Is it going to do okay economically? Great, let's go. That's about identifying and removing risks. 5 weeks ago, all the major risks removed, and a big part of that was the water, and a bunch of technical stuff. got a hell of a strategic land position. We've got 35 square miles in the Mason Valley. It's the center of infrastructure. And these are the metrics from the PEA, very stale, March 2024. This is on a 385 copper basis. In our discounted cash flow model, every 10 cents for us is worth 60 million NPV. A lot of things are going to change. I'm really looking forward to being able to talk about those things. Very excited to talk about writing the sections right now. You look to the north, it's an integrated project. You got the MacArthur mine, brownfields, already mined by Arametco. Copper daylights on the surface. Strip ratio, 0.3 to 1. Okay, not very often. Yarrington down to the south, mined by Anaconda in the 60s and 70s, 4 daylight. And 120 miles. By the time we get done with when I can talk about PFS, I can say I would absolutely expect that the M&I for these will be up. It's definitely. We also get to process some old residual material. It's called bat leach, BLT, we call it BLT. So that's just a bunch of old material that Anaconda processed with some older technology. Sitting there, 50 tons of material with copper in it that will come out in leach. It's going to cost us $1. 5-year payback on the 5-year payback on the PEA, 17+% on the IRR, pretty reasonable. Again, that's all at 385 basis. I want to talk about that thematic a little bit. You know, pure copper cathode being produced. There's only 6 projects in the country right now that plan, that are pre-construction, that plan on producing pure copper. By planned production per year, we're sitting about third right now. You got Arizona Sonora's Cactus, and then the Santa Cruz project, and the Copperville, which you probably heard a fair bit about. They've been in the news quite a bit. They're only going to produce about 85 million pounds a year of cathode. So if you do the metric to imperial conversion pretty quick there, you can see that even that, I think Jack can speak. This is the only cathode that's going to be coming into a 500,000 metric ton. That doesn't even touch it. Feeling pretty confident about where the forward price curve is for domestic USA copper. Probably one of the few times where investors, funds, and potential producers are aligned on the future. So this is a bit where we're at and where we're headed in terms of the production profile. So we'll get the PFS out at the end of next month. We'll kick off our DFS. And then we'll get straight into the project permitting. Now, this often we do this because this looks linear. That's not how it happens. When you start your DFS, the same day you start your project. A gentleman that Jim, he was one of the first people. He spoke about how, of course, you do those in parallel. Try to do that under 2 years. I've been very conservative here, so follow the timeline. Second half of H2, we get the PFS done, project permitting, sort of 27, 28, construction, and then go into commissioning by the end of the decade. We think, I think, what's important here is I think we can go. Right? I'm not going to go through all this in detail. It's the afternoon, and everyone's had lunch. I'll just say that the PFS is about de-risking. Again, de-risking. We've done the studies, we've done the work, we've drilled the holes, we've done the geotechnical, we've done all those things to get the full understanding of what we need to do. No surprises. That's what you go through. It's very clear. I really like the trade-off studies. I'm a mining engineer by training. We got to do a lot of really interesting trade-off studies in this PFS. So acid plant, rail, all of those sort of things. A lot of consultants, 50, 60 consultants working on this over the last sort of 15 months to pull all this together. It's looking really good. Interesting part on the baseline environmental studies, because that's the stuff that can take long. This site has been studied for 20 years. The baseline is established. You don't have to wait the 3 to 5 years to establish a baseline. So that's going to save us a lot of time. Met testing, this is a big one, right? Heap leaching, copper sulfides, the oxides. We've got a great partner in Newton, which is a Rio Tinto venture. They've been working on this a long time. It's not secret squirrel stuff. Yes, they have a lot of proprietary knowledge, really switched on about it. In a nutshell, this is high heat bioheat features. It's the bacteria, it's the bugs. It works. 40 something colonies, right? The outcome from our PFS test work so far, we're pretty much done with phase 2. This is in line with our expectations in the PEA, so 70 to 80%. Oxides been so this is not surprising for us, especially for me, because volumes of data. Done the CFD modeling, scale up model, all of those things. That's really important because that informs our things. Drilling, don't want to spend too much time here. We did do a little bit of drilling last year. We saw some opportunities from some of the previous work, some expansion opportunities, some shoring up, some conversion, right, inferred to indicated, measured, etc. All those came good in line with expectations. You're all going to see that in the results of the PFS. Again, my expectation is that we will convert all of the MRE, both MacArthur and Yarrington, into greater than or better than 90% measured and indicated. All that stuff on the right-hand side, right? The Yarrington mineral resource, MacArthur mineral resource breakdown. That's all. I expect that to go well. And there's some growth potential there. A lot of metrics on here too. So on that 2024 PEA chart, that'll all get updated here in about 6 weeks. All new and current numbers, OPEX, CAPEX, new copper price. We're obviously going to use 5. Script's about the same, and the same production profile at 116 million. Pretty good cash cost of 220. for North America for sort of a 0.3% copper grade. That's a pretty good outcome. We think that's pretty competitive. A little bit about our agreement with Newton. One is they have the IP around the sulfide copper heap leach process that we've shown has been our test work, their test work. They've got about $28 million into the project development so far. We've got $82 million combined between our company and what they've put in. They've fully funded everything from the PEA right through to where we're at now in the PFS, and through the option to earn in agreement, there is the opportunity for them to continue to participate and push through to DFS and the permitting side of things. That's the plan, and that's where we're heading. Are there other opportunities for other people to come in and other parties to participate at a company level? Absolutely. Our agreement with Newton is at the asset level. Work differentiate. We're discussing these things right now with Newton, okay? Because we're so close to the PFS, and there's a lot of information flying around that looks pretty exciting. So we're in discussions with how that looks and what's going to be the best for both parties. This is where I wish I could walk around at the point, but talked about strategic land package previously, and this is that other value proposition. I want to put a pin in the first 2 cents. That's what the market's value is for, right? For contained pound of copper that's in our project, Arrington Copper Project. I'll let that sense. That's about 45. On our water rights, 6,000 acre feet. Value proposition, in my opinion, from that stage. Strategic land package, we got about 35 square miles. Just to the west of the Yarrington pit, so that red dot in the center lower is Hudbay's and Mason deposit. That's 13 billion pounds. And that resource that Ann Mason sits in, we block the resource off from expanding. Probably a lot. And the drilling demonstrates that. And make it in. So we kind of, there was a gentleman who talked about looking over the fence at each other. That's exactly what's happening because I actually live in Yarrington 4 or 5 days a week. Our offices are about a mile apart. There's 2. So there's some interesting things going on there. You also need to understand that the blue, our land position, that's the Mason Valley. We're going to put a rail spur up to the main UP line. You can see it up there, the dotted line. There's no realistic way to get any other infrastructure down into that area other than going through our helm. We've got the ground, we've got the infrastructure, the brownfields. We're just going to redevelop 2 open pits that have already existed for the last 70 years. And we've got the water. So there's quite a big deposit to the west, nice neighbor. And there's also one to the east. That's a different kind of mine. That's a different profile. That's a greater. Southwest critical materials. That's public. They're just getting restarted after a that's kind of our strategic position, and obviously synergy. That'll happen. So this is the third part where I wanted to talk about the sort of value proposition, the three prong here. This is the Bear deposit. This is the kind of growth or pipeline, if you will, that could feed into the Yarrington Copper Project. And I'm really excited to talk about this in the future. But what I can say now is that it's 4 square miles is the known mineralization. We had, I believe it was the second or third best drill intercept last year by a junior at nearly half a mile at 0.4% copper. 2,400 feet at 0.4 copper, intervals at 1 to 2%, and we lost the hole in 1%. There's one, it's hard to get your head around that size of a deposit and what the potential is. So that's something that we're looking very closely at development options around a mineral resource estimate. We're currently evaluating that. And we're excited to continue working. Capital structure, we got 411 million shares on issue. What's interesting to me here is that 41% of the company is held by management and directors and have been held by 10 to 20 years. Juniors sort of come and go. We've been here in this valley working on this, pulling the land packages together. We're actually the first company to ever pull the Bear package together. A big square chunk of ground. So the management and directors have held on for 10, 20 years, holding 41% of the company. One is they believe in the company. That also makes liquidity challenging at times, but there's always going to be a point of inflection, right? Over time, as we drive the project forward, meet milestones, build confidence with the market that we do what we say we're going to do. That's really important to me. And that's how I've run things in the past, on time, doing those sort of right things. And the upside maybe with Bear and our strategic positioning, those are the catalysts. Drive the share price. We're already past that Lassonde part of the curve. Delivery of some of those targets in progress. All that just aligns with Trump. Actually, it doesn't. If you compare our peers to us, we're outperforming every cathode peer in the U.S. by double. Here today, well, we've got no debt. We've got $6 million in the bank. Our burn rate's about 120 grand. But lots of breathing room to make sure we do the right share. I've kind of already done the summary. Got 145 left. And low operational risk. We got a strong backer right now with Newton. Very clear permitting path. We know how to get things done in Nevada. Nevada's been mining. They've got all the kinks worked out of the system pretty well. We don't have any land issues. We don't have any rare things to work around and work through. Got that strategic land package. We got the Bear pipeline potential. We've got a project that makes money, that's got a good margin, can weather any storms along the way. I think Jack and maybe a couple of you mentioned, everyone's pretty bullish on copper, but even the negative people are still bullish on long copper. So, right? So I'm feeling comfortable with that margin. Put in elsewhere to really blow up our resource. Again, the catalyst PFS next month, Bear deposit potential, get that outcome done, and just get into DFS and permitting as quick as we can, and make sure we stay focused and keep delivering, and get the results. kind of our approach. That's my approach anyway. Questions?
Dale says.
I don't want to leave anyone open.
Are you only making cathodes with the copper, or are you going to be making other wires?
Cathode.
Only cathode.
That's all we're interested in.
Is that the highest profitability material?
It is, because you get a premium and the buyer pays freight.
Right.
Because it's so rare.
And so all the metallurgy is covered by your partner Newton. You know, the president of Rio Tinto just resigned or died or something like that.
Okay.
He's gone. Well, just be aware of it.
Yeah. Thank you. That's not good to hear.
Yeah.
We don't have anything to do with Rio.
Yeah, you're dealing with Newton. Yeah.
Newton's their own LLC and their own venture.
Yeah. And so what do you think is going to happen? Will they be part of a offtake agreement with you, or I mean, can you share anything?
Sure. I can share a bit, right? And it's a good question. It's the question I would ask. They have an option to earn in. Once they spend a certain amount of money, right, there's a percentage there. There's also a great relationship with Newton. They're really good to work with. They're flexible in that they actually see your point of view and where you're coming from as a junior. Not everyone does that. And they're willing to put their interests on the table. We can put our interests on the table, and we can see if there's common ground and find a pathway through that makes everyone happy. And we've done that several times along that journey. You saw the bouncing ball. We've had to do that with 3 times, and we've been able to.
2 questions. First one is, are you going to use LME or COMEX pricing for your project in the PFS?
We will use, we'll publish an NI 43 101, which uses forward and backward, and it'll be LME. Will be the basis of that from a statistical standpoint. There's a formula that's accepted and probably in the full mark for the PFS.
Okay. Yeah. And second question, has Newton actually put a mine into operation? Because I'm familiar with them and they're developing a number of joint ventures such as with yourself. But what's the most advanced project they're working on? Or has something actually gone into production with their technology?
Sure. Look, you can go to their website. It's very well laid out there, all of their projects. So I'm just going to speak from my knowledge of what's on their website. And I think they've got maybe 10 projects on the go with where they've invested in one way or another, and are developing their technology. And to answer your question more directly, Johnson Camp, they are going up to that is the most advanced stage for them, and they're at the bulk level, so upscale to and progressing through that. Probably, I think H2 this year they're going to come online. That answer? Where they're up to? Yep.
Just a couple of more questions on Newton. So I see you have no debt. Is that correct?
That's correct.
And does Newton have any debt? In other words, I always just check on technology if it's bankable. So has any bank financed any debt on any Newton projects?
I would be completely speculating on Newton's financial position. I know they're a Rio Tinto venture, and I can't speak to an LLC.
No, I guess it's a TRL level 8 or 9 technology. Is that what you guys would categorize it at?
I'm not sure.
Okay, and then next question would be on the JV with them, or not JV, but on the partnership with them. Can you go into a little more detail on a go-forward basis what the economic split is from whatever they're participating in? I mean, they're writing checks, but how do they get repaid, or how do they make money, and what's that economic split look like?
Sure. There's a percentage piece split of the assets. So that's how that works. And we're currently in the process of working with them on what the next stage looks like. So there isn't anything for me to say on that other than what we've already executed in the past, right?
So what was the split on the assets, or is that not public?
I'm not going to comment on the split in the assets at the moment.
And then on the go forward tech commercial side, is that public of the actual commercial split on the production?
On the technology?
No, on the production. I mean, as part of this JV, are they earning a percentage of revenues off of an SPV or whatever an asset is of cathodes that you're selling? And if they are, how much are they getting for that?
Sure. This is to be determined, right? So there's 3 stages. Stage 1, 2, 3. Details that you're asking me for are to be mutually agreed in stage 3 upon completion of the PFS. So this is probably helping. I was probably not very clear before. So we are literally in the process of working through that negotiation and how we move forward right now.
And one last question, how much capital do you have to raise to get to commercial production or cash flowing?
I think the initial capital was $450 million from the PEA.
That's to be raised.
Yes.
Okay, thanks.
I was looking at your, again, sorry about my voice. I was looking at your timeline to go full bore. You have a permitting process in there that can be questionable. Do you feel that there's any way that you won't get your permits, or that there's going to be any kind of hold up on that side? Because I was like, I believe it was 2026-7 for permitting. Yeah.
2 to 3 years is fairly standard.
Fairly standard
in Nevada.
Okay.
I chose 2.5, right? When I put that together, I think we can do it faster, but that's what I chose.
Okay. Okay.
Our best advisors in history chose a 2 to 3 year position. A gentleman earlier said he did it in 18 months.
Yeah.
Yeah, I like the sound
of that. Yeah. No, but you said you were being conservative, but 18 months is really good.
Yeah.
All right. Question in the back.
Oh yeah, hi, good presentation. So on the permits, you're in Nevada, where whiskey is for drinking and water is for fighting. You're redeveloping a pit lake. Are you assuming a responsibility or liability on? I don't know anything about that pit lake. Is that that's a local community issue? Have you started approaching that? Have you modeled
Absolutely.
your pit lake? That's what shuts down projects, right?
That's a great question, and I should have spoken. That's one of the principles, right? So there's a lot of benefits to the community. Okay, this is a farming community, right? Before it was mining and sort of ag, and now it's ag. There's a gentleman that I think he cooks 10, 20%. So they're all saying, when are you going to give us that water? Okay, there's 43,000 acre feet. The whole basin consumption annual is 25,000 in the entire valley. We've got nearly, say, 1.75 years worth of water stored in that lake. And here's the unbelievable thing. How many pit lakes full of water have you ever come around in mining that are near drinking water quality standard? I've never seen it. This one is. Just by the nature of the deposit, the oxides, the sulfides, and how it works out, there's hardly any analytes that exceed drinking water standards. So we've designed the water treatment facility, fully engineered, actually came in way lower than what we thought we'd have to spend on it in the day because of that. And we have 3 different ways. We can put that back in the river, which is great for everyone in the community. We're going to be able to put that water in the irrigation system for the ag, and we're going to be able to do rapid infiltration basins and put it back in the aquifer for people to use.
Okay, we're at time. Thank you, John.
Thanks, everyone.